Limited exit activity has naturally raised questions about valuations. If sellers and buyers agreed more on price, wouldn't there be more activity? And we know there are trillions of dollars of dry powder out there, so it has to be that sellers are delusional. After all, it's not as if buyers are offering cut-rate prices. Valuations for new deals, in EV to EBITDA terms, briefly dipped after the 2021 peak. But those prices have recovered over the past few years in most sectors. Financials, consumer staples, those are the glaring exceptions, but they're smaller parts of the ecosystem. And tech deals, they make up an increasing share of activity, which has pushed the all-sector average valuation higher. So let's spend a moment on the deals purchased at peak prices in 2021 and 2022. These are the deals that should be approaching exit age, but are mostly unrealized. The valuations of this cohort have increased by half a turn or more in most sectors. Financials was the only sector that hasn't experienced multiple expansion, on average. At first glance, this seems like wishful thinking. How could these most expensive valuations get even more expensive? But, in contrast to Bitcoin treasury companies, there is some logic to what seems like ever-increasing valuations. Company quality tends to improve under GP ownership. Companies become more efficient, they develop new products, and expand into new markets. This can result in more dependable earnings and better margins, which should command a higher valuation multiple. So mature companies, on average, should experience some multiple expansion, but it is still the earnings growth that drives the majority of value creation. We've also seen the bid-ask spread, measured as the difference between the price of new deals and the average valuation of unrealized deals in the same sector, narrow over the past year. And it seems to be the buyers that are capitulating. Does this mean that every valuation for every asset is accurate? Of course not. But are they generally accurate? We're betting on it.